Hello, everyone, and welcome to Stock Market After Hours. I am Mark Rusin, CPA here in the state of California. It is great to be back with you guys for another week of Stock Market After Hours, as we like to do all the time. Let me know where you're tuning in from. What are some stocks that you've been buying as this market continues to plow higher? What do we just see? NASDAQ, 20,000. The pace that we got from 10,000 to 20,000, essentially a doubling in that particular index, was so much faster than what it took to go from 5,000 to 10,000, which was the same exact doubling there. So it's quite fascinating, this bull run that we have been on for quite some time now. Pretty much the last real turbulence that we've had in the market was back in 2022. But since then, it seems like if you're brand new to investing and you just started investing in the past 12 months or so, you're probably looking at this going, man, making money in the stock market is pretty easy. This isn't what we usually go through, but it's important to ride the wave while we're going on it. And it's, I always often like to say, I prefer time in the market rather than trying to time the market. And one of the greatest investors out there, Warren Buffett and his team, they usually go with this method. But over the past 18 months or so, what have they been doing? They've been trying to predict a crash. They've been increasing the amount of cash that they have from 200 billion to now over 300 billion dollars over that time span. Some people might say, "Oh, well, he's collecting interest. He's collecting 4, 5, 6% right now, guys. Let's not be, facetious here." And look at it, when you have an S&P 500 that's up over 30% over the past 12 months and was up over 23, 25% in 2023. You're leaving a lot of money on the table from that perspective. But yet again, I've never, looked over billions upon billions of dollars of assets from that standpoint. So I'm sure there's got to be some sort of conservative approach taken there. But $300 billion in cash is a lot of money to not have invested. So it's important to always, try to stay invested. Doesn't mean we need to get overly high risk or even on the other end of the spectrum, overly conservative. It's important to have a well-balanced portfolio. So it's good to be back with you guys. Let me know where you guys are tuning in from. We got Birds and the Bees is in the house here. Bitcoin 101K. I'm looking to park my 401K somewhere else other than M1, since they're charging $3 a month under $10,000. I definitely use Fidelity and Schwab. I've used Vanguard's a little more archaic to me, but I prefer those two there. Hoagie tuning in from Indiana. Good to see you. Ty from Seattle bought some more Pfizer Energy Transfer and planning on buying some Lockheed Martin aggressively now that it dipped into the 400. What do you think about them at that valuation? Yeah, those, I was looking more at General Dynamics is a name that I think is vastly undervalued right now, down more than 15% over the past 3.5 weeks. Again, all of the defense contractors have been down ever since Trump elected who he was going to have as the Secretary of Defense. We'll have to see if Congress or the Senate more precisely is going to run through with that. And we have this Team Doge with Elon and Vivek coming in, looking to cut some areas. One of the areas that's been mentioned is how much we spend on our defense budget. However, if you go back to Trump 1.0, the amount of money that Trump spent on defense as compared to the prior presidency or the administration with Obama, it was a massive amount there. So I don't know if much is going to change from that perspective. Trump wants to have the best and the brightest in terms of defense. He wants to have a strong, powerful military from that perspective. And even if we pull back there, because what a lot of the concern around this has been with Trump saying, hey, we need to not be involved with so many wars and tussles that are going on across the globe there. So what happens? Defense contractors fall, but our allies can still participate and order from these defense contractors, our close allies from that perspective. So even if the U.S. pulls back, maybe it's going to increase some of those others from that perspective. Just another look there. But to answer your question there, in terms of defense contractors, talking about Lockheed Martin, Raytheon, talking about General Dynamics and Northrop, these are all companies that are on a pretty nice little pullback right here. General Dynamics being the biggest pullback there. So I've actually entered into some option plays. So if you're a subscriber to my newsletter and part of my Discord community, the Stock Investors Edge, you know that we just recently released a brand new product that is solely based around options. It's our options Edge Plus, where we're going to be giving out weekly reports and you have access to special rooms discussing options in there. So we just did one on General Dynamics. Definitely check that out. You can see the link down in the description below if you are interested in that. John Bircher in the house. Good to see you, my friend. Google and Broadcom right before the move up. Nice. Good buys there, John. Checking in from Minneapolis, Minnesota. Drew, good to see you. Yeah, Google, I bought some more in that mid 160 range, and here we are now sitting at right around 200, looking like this is a stock that wants to push through 200. And if you look at that underlying option information that's going on there, definitely a lot of people that are gearing towards a higher move from here as it pertains to Google and Alphabet there from that perspective. Broadcom coming up here with some earnings right around the corner, so we'll see how those happen to play out there. Harrison from southeastern Kentucky, Google up 11% in the past 5 days, and that, as you guys know, if you've been joining either my live shows, if you're a subscriber to my Investor's Edge, where I publish my entire portfolio, you know that my top position is Alphabet. So I've been a happy camper from that perspective there. So no complaints coming over here. Brian, Connecticut, SCHD, blue chip stocks. Love it. Ricky from Nashville. Got my roommates watching with me tonight. Nice, Ricky and the crew there. Jeffrey Hatch, good to see you, my friend. In Washington, bought some SMH, as did I. Uber, and sold an option play and closed several. So Jeffrey's been busy there, and I know he is a member there in our Options Edge and stock investors community there. Sophia from San Francisco. Brian buying some tech ETFs there. Ty, what do we got? Thinking about buying Uber with a big dip, and Johnson & Johnson, the 140s. Yeah, Johnson & Johnson's been one of those stocks, a dividend king that's been increasing its dividend for a number of years, but it's just been going nowhere. In fact, it has been going somewhere. It's been going lower, and I have a decent-sized position in Johnson & Johnson. It's one I'm taking a hard look at right now because it is a position that looks relatively cheap, but with Trump, the administration coming in, looking at some of these pharmaceutical names, I do have some concerns, and those are likely headwinds heading into 2025. So it's one of those situations that, although it's cheap, could my money be used better elsewhere? And that's something I'm kind of looking at. Not something I'm going to sell out by any means, but maybe trim my position a little bit. We'll have to see here in the near future from that perspective. But in terms of Uber, that's another one of those. If you've been joining, if you are already in our Options Edge Plus, you know that we've been doing some Uber plays. We booked a 55% profit in a matter of a few days yesterday, and boom, we got the drop today, which was perfect timing since we sold out of our option yesterday. Got the drop today. What do we do? Let's go play another option play. Let's go collect another couple $100 from that perspective and see if Uber drops even further. And if it does, we'll gladly buy it there. So definitely trying to, I like to say with that Options Edge Plus product that we have, that we're hopefully going to be not only getting you the income that you paid for that subscription, but hopefully doubling it and making it worth it from that perspective there. And there's a lot of education in it. Malaysia is in the house. Nice. Birds, not Weeble for Hoagie. Hoagie is not a Weeble fan there. Korean Cardboard, hello from South Korea. Probably putting this month's salary into the emergency fund. Definitely got to have that emergency fund stacked up. You never know what things could be headed our way. Hopefully nothing terrible from that perspective, but we also always want to be ready. M1 is charging a monthly fee. Do you get free movies with your subscription? Oh, man. Nick, hello from Iowa. Thoughts on Palantir? Palantir is one of those momentum stocks. So sometimes with these momentum names, valuation is just thrown out the wayside. So if you look at companies like a Costco or a Palantir, I know that you're like, why are you comparing those? Because those are two companies that are vastly overvalued from a valuation perspective. But sometimes there's this wave that investors ride that valuation is just thrown by the wayside, because when you look at Palantir, the valuation makes zero sense. It's not a stock that I'm looking to invest in. Would I do options in it? Yes, absolutely, because it's a lot less cash outflow out of my pocket, that in case something does drastically happen and investors come in and start taking their profits saying, hey, now I do want to transition into valuation. This, ferry ride that we've taken higher, this show's got to end. We got to take, at some point, people have to book profits. And that's one of the things you got to focus on when you're invested in growth stocks. You could be up 100%, 200%, 300% in a stock, but those are all just paper gains until you do what? Until you sell. One reason I like to have a good exposure rate to dividend stocks because I'm constantly getting paid on my money invested. I don't even have to sell. I get paid on a monthly basis from all the dividend stocks that I invest in. Doesn't mean they all pay monthly, but they pay on different cycles to where I have income coming into my account every single month from that standpoint there. Quantum computing, that has been all the talk as it pertains to Alphabet. If you're someone that's been watching Alphabet, quantum computing is kind of what has taken not only valuation from a Mag 7 perspective, but we've also seen the quantum computing. I think that's, we're starting to see Alphabet kind of flex its muscles to a degree in terms of what they've been working on as it pertains to AI even. And, them and Microsoft are kind of going head and head and back and forth. And last week, Satya Nadella had made some comments about Alphabet. And then the Alphabet CEO came in and said, hey, let's kind of compare what Microsoft has built in-house as it relates to AI compared to Gemini, which is what Alphabet has bought. And they are light years ahead. So what did Microsoft have to do? They had to go out and say, hey, what we're building isn't really working. Let's go out and buy a company that's already far along. So it's a much more cash intensive process, but it has helped them. And now they own a good chunk of OpenAI, which is ChatGPT right there. So awesome. A lot of good questions. A lot of folks in the chat room today. Love to see it. Let me share my screen, the iPad with you guys, and we will get started today by taking a look at the sectors as a whole. So as you can see here, year to date, the communication sectors, whoops, dropped my pen. The communication sector is the leading sector so far, year to date, up 41%, which is quite impressive there. Leading that charge is going to be what we've seen from Alphabet. The two leaders there are going to be Alphabet as well as Meta. And then we have information technology, which is up 36%. Consumer discretionary, which is leading the charge there, has been a two-horse race between Amazon and Tesla, really carrying the weight for that entire sector there. And then you have financials, which is up 31%. So as a whole, we have four sectors, four of the 11 S&P 500 sectors that are outperforming the index. But as you can see as a whole, there are no sectors that are in the red. So the worst performing sector has been healthcare, up 5% on a year-to-date basis right there. So now if we move over, let's take a look at the 3 months. So from a 3-month perspective, and again, a lot of has changed more recently with Amazon and Tesla charging higher up to new 52-week highs. Tesla's just been on a tear pretty much since the election. Communication services, infotech, and financials, again, leading the charge. Beating out the S&P 500, all up double-digit percentage in the last 90 days. However, there is some red here, and healthcare has really struggled since Election Day. And that makes a lot of sense with RFK coming in, with Doge coming in, saying we need to cut some spending around this stuff. We need to take a closer look at some of these biotech type companies and stuff like that. So things that we do want to pay attention to as investors, as we are realigning our portfolios here in 2025, you want to talk about the next administration that's coming in, because there is going to be things that are going to be changing. I would assume we're going to get an extension on the tax cut bill that we had that was coming up on expiration. You could assume that financials, that's already performed well since Election Day. Healthcare could see some headwinds overall from that perspective, and we're gonna have to see what rates are going to do. Once you move on from a few different things, you got to look at the administration, you got to look at the Fed and how interest rates are going to play into it. You got to look at how inflation is going to play into things, and kind of put all this together to see, hey, where do I want my exposure? Because this is when we realign our portfolios going into a new year. This is your opportunity to do some tax loss harvesting. You have some big winners. Maybe you have some losers in your portfolio that, man, you've been waiting. I just want this to get back to break even so that I can get rid of it. Well, you can do some tax loss harvesting, and it might make more sense to actually sell it right now at a loss, because that's going to offset some of those gains that you might have, which is going to lower your taxable rate from that standpoint. So let's move over here to the last month and see what's been working. We could see consumer discretionary is up 8.5%, communication services, and look at that, consumer staples up 2.5%. So those four are the only ones beating the sector, but a lot more red in the past month here. As we could see, energy, healthcare, materials, industrials, real estate, and utilities, all sectors that have been in the red over the past 30 days here. And then as for today, communication services, no surprise with Alphabet, one of the largest companies in all of the S&P 500, up over 5% today. So that's a brief look at the S&P 500 and the different sectors that we have there, let's go over and take a look at the individual indices here. So beginning with the Dow Jones, I always like to show you, since our last show, what has these major indices been doing. And when we take a peek here, we can see the Dow Jones is actually down 1.6%. Year to date, though, still up 17% overall. We move over to the S&P 500. If we look at the past 5 days, we can see S&P 500 actually is flat for the past 5 trading days, and year to date still up 27% from that standpoint, up over 30% over the past year. And then if we look here at the NASDAQ, which is now above $20,000, over the past 5 days, up 1.3% and up over 33% over the past year to date, I should say, here in 2024. So what are some notable things that we've had in the market this week? We've got some, we haven't had any crazy, slew of earnings that have come in. We've gotten Oracle earnings. We got some Adobe earnings today, which the Adobe earnings were actually okay. They beat on both the top and bottom line. Guidance was not that great. That was the big thing. But to see a stock down, 8% at the time that I had looked at it, putting together this show, if I look over to my computer here to see what Adobe is doing after hours right now we're up to 9%. 9% after hours Adobe. So they're going to have a rough toe tomorrow. Going to be back below probably $500 per share. And with a lot of this AI stuff gaining more and more steam and companies starting to see it benefit them, not just pouring money into the research, but starting to see benefits and costs being cut, that's going to be a headwind for someone like Adobe, who had a lot of products that create these things that AI can now do at a much lower cost to some of these consumers here. So we'll have to continue to see this. This has really been a headwind for the stock over the past few years here. And it's a stock that, if you look at it from a technical basis, has been declining. It's having lower highs from that perspective. So it's definitely something to keep an eye on. I have a very small position in Adobe, but it's another one of those, just like Johnson & Johnson, that I'm taking a little bit of a closer look at to see if this is a stock that I want to continue to hold for the foreseeable future heading into 2025. So we'll have to see how that plays out from that perspective there. But other news that we got was in relation to CPI, or inflation, the consumer price. So let me share with you that screen right there, and we can go through what the November report was. So let me get this going here on the iPad right now so we can see the CPI report came in 0.3%. was the seasonally adjusted for the month of November. So on a month over month, we are at plus 0.3%. Okay, so that was the growth. And if you look down here, that is higher than what has been for the past 4 months in a row, which climbed 0.2%. So we still continue to see inflation increasing, going in the opposite direction. On a year over year basis, we're sitting at 2.7%. And again, the Fed is trying to get closer, more on the PCE report, but closer to a 2% run rate from that perspective there. So definitely, what are the things that had some heavy weight overall? Well, on the downside, we saw fuel and oil down 20%. Not saying that I see it much here in the state of California when you're looking at gas prices at $5 per gallon. Transportation services, those were up 7.1%. Shelter was up almost 5%. And when it comes to shelter, all of these things have different weightings when we're looking at the CPI report. It's going to be some of the big differences between the two reports we see this week. But again, shelter costs, those were up 4.7%, as we just saw a second ago. Okay. And I don't have much writing space over here, so bear with me. But if you're looking into this report here, shelter costs have a huge weighting on the CPI report. It amounts to over 40% of that 2.7% gain that you see month over month. So if we're looking at the run rate in terms of the 4.7, that is starting to slow. Back in August, that was at a 0.5%, 0.4. We saw July, August there. Now we're starting to trend down. We were at 0.4 in October. We're down to 0.3, which is the lowest we saw in September. And before that, the lowest we saw in June. So hopefully these shelter costs continue to decrease a little bit from that perspective. If we continue down here, we can see some and take a peek at the seasonally adjusted CPI, not seasonally adjusted, I should say, CPI numbers, and things where they take out the core CPI. You want to pay attention to core CPI. So I'm going to show you guys that one really fast here. So if we go to CNBC CPI report, this will give you a much cleaner report on what things did overall. Let's go right here. This might be the video one. So, yep, that's not the one we want. There's the one we want right there. So as you can see, excluding food, that's the core CPI number that you can see right in the middle. That was at 3.3%. So that one's actually above 3%, and it's been trending there. So still, the numbers come way down from the 10% number we saw a few 18 months ago. However, we are still above that, well above that 2% threshold that we're trying to get things down. But when you look at the overarching numbers and you look at what are the areas that have a big weighting, we expect those to come down. When you look at things like insurance costs that are up something like 20%, when you see where shelter costs are, once we get some pressure release on those areas right there, that can drastically bring down the CPI, which is why investors we're excited today. You could be looking at today's CPI report saying, okay, well, it continues to grow. So why are we so excited about why is everyone buying the stock market today? We just saw inflation that continues to climb higher. Well, you got to kind of look outwards and see what are the core players. Where is a lot of this inflation coming from? And that's what one of those reports were, that you could see the inflation breakdown. So let me share my screen with you here again, where you can see where the inflation breakdown is for that November 2024. So if I go down here to the bottom, you could see more specific things overall, like eggs are up 37.5%. That's pretty wild there. And juice is up 17%. But what are some of the things that are starting to come down? You could still see here motor vehicle insurance was up 12.7%. That's a big number there overall. Some pet services and things. So, we want to see those numbers start to come down. That's not a normal thing where we see this insurance numbers at double digits. So if we can get some pressure release on those areas right there, that's going to be very beneficial to those numbers that we're going to see moving forward, which is why investors are probably excited, because they're kind of looking a little bit more at the details. They're not just looking at the headline saying, oh, we're up 3.3% on a core CPI, we're probably in trouble. No, what makes up that core CPI? And they also want to see what the next report looks like there tomorrow. So those are things that we want to look at overall as it pertains to CPI here. So let me jump over here to the comments, and I'll scroll down those real fast. And again, if you're one of the paying members, those loyalty members that pay to my YouTube channel, and you have a question, that will bounce right out to me. So those are ones that I won't overlook by any means. So definitely, if you are a member and you do have questions, feel free to make note of that, and you can drop that in there, and I'll make sure to answer any of those questions that you have there. So, all right, let's keep cruising ahead here. We've looked at the major indices. We've looked at the report. And what does that mean for the Fed moving forward? That's what a lot of the talk of the town was today in terms of this next meeting that's coming up. Less than a week away now from the final Fed meeting here of 2024. So if we look at the Fed meeting after that CPI report, look what we have here, folks. Almost 100% expectation that we will get a 25 basis point cut in the December meeting. I think that's pretty much locked in now once we got that CPI report. But you can see just how much that number has increased down there at the bottom. A month ago, we were at a 65% likelihood that we were going to get a 25 basis point. So that has risen over time, and now we're pretty much sitting at 100%. So we know that we are going to get one more cut here. That'll bring us down to that 4.25, 4.25 overall. But where are we expecting things to be a year from now? Let's look out December of 2025, and you can see that the highest percentage there is at a 3.75, so 3.75, meaning we need 1, 2, 3 more rate cuts. That's including the December one. So after December, we are only now pricing in maybe 2 more rate cuts for 2025, according to these futures. But let me show you another one that I thought was quite beneficial here. Was this chart down here. And you could see, let me make that a little bit bigger for you guys so you can see it a little bit more in more clarity down there at the bottom. You could see that we're sitting now at that 4.75. So that's going to bring us down to about 4.5, 4.25 is where we will be as of December. But if we go out until December of 2025, you can see that this one is implying maybe a rate closer to 4 or slightly below 4%. So we could continue. This is more pricing in close to three hikes in, or three, sorry, not hikes, cuts, folks. Three cuts here in the next year. So that needs to play a role in how you are kind of preparing your portfolio moving forward and repositioning some things as it pertains to your own portfolio. What are your goals? What is the strategy that you're taking? Is it dividend? Is it growth? What's your risk profile? All of these things you need to ask yourself to see where money needs to be. But I still believe that the first half of 2025, I believe we could get some volatility. You usually get some repositioning right after the new year calendar turns there, so into January, because again, there's certain of those hedge fund managers that want to show a portfolio as of 12/31, but we don't really know what's going on after that until the quarter end when it becomes March. So they can show one thing at December 31, but then they can reposition that completely if they believe that is something that's going to work in the first half or the first quarter of 2025 moving forward. So you tend to get a little bit of volatility to start, but I believe the first half of 2025 is going to be a solid half from that matter. And then we'll just continue to take in more data, look at earnings, look at economic data to see where things are overall. So what we're going to do now is we're going to look at some charts here and take a look at some technicals to see where are things sitting at in terms of the S&P 500. So right now on your screen, you're looking at the SPY overall. And with SPY right now, we're kind of just trending higher in this third little wave that you can see down below. We've kind of bumped up against a little bit of resistance, but it is trending in the right direction. And that 100-day moving average seems to be a solid support line right now, which is closer to the 590 range right now in terms of RSI. RSI sitting a little bit high, sitting closer to 65 right now. Again, we want to keep it between 30 and 70. Anything above 70 usually indicates an overbought market. Anything below 30 usually indicates an oversold market from that perspective. But a couple that I want to take a closer look at here, and one being is that of Uber. So if we take a peek down here at Uber, you could see that we are pretty much trading at an inflection point from this standpoint. And if you look at Uber, again, this is a position that I put a cash secured put on. And again, if you're interested in options, we have our brand new Options Edge Plus. You can check out the link down. It's part of our Stock Investors Edge community there, where we're putting out option plays on a regular basis. We have an Option Edge report that goes out every single week, detailing and taking you step by step through different option plays that we are doing, when we're buying them, when we're selling them, what is the condition right now, if it's still open in the next week, and we will be showing you a brand new option play each and every week within that report. But in addition, we have our whole Discord community where we're showing a number of different option plays that we're getting into on a regular basis there. So Uber is one that I mentioned. Over a 24, 48-hour period, we made 55% profit, a quick profit on our trade overall. We have since closed that yesterday. We saw the big drop in stock price here today with a lot of selling pressure. What do? We went out and sold another cash secured put sitting right around the $55 level right there. And what are some of the things that we're looking at in terms of why did we want to get into this? Well, let me show you right now. So if we're looking at the Uber chart, let's zoom in here a little bit. Where's our RSI sitting right now? Sitting at a score of 27 right now, indicating that this drop, it appears like looking out over the next 30 days, a lot more buyers that are looking to get into this position, and the selling pressure is starting to wean a little bit right there. So we could expect a bit of a bounce here. That's usually what that indicates. Well, last time that the RSI got this low was here back in August. And what happened there? That was the low point, the last low point that we saw in terms of Uber. The stock price bounced upwards to $75 shortly after that. Not saying that we're going to go from 60 to 75 all that quickly here, but I sold down here, meaning that this stock would have to fall roughly another 10% just for it to be a break-even point for me overall. And if we drop to $55 in terms of Uber right here, that's a position I would love to buy at that particular level and at that particular valuation there overall. But if it bounces here, that's again just going to be more profitable to our option play. And if you happen to look at Uber, after hours right now, the stock's up roughly 3%. So if that holds for tomorrow, we're already going to be making a good amount of money in terms of what we were expected to make from that particular option play. Some other things that we've been looking at that we've talked about in that options edge plus has to do with SMH. Semiconductors have kind of taken a back seat to this particular market here in the past 3 weeks, and that's kind of a healthy thing. You start to hear some of these rumblings as it pertains to the market climbing higher, the NASDAQ up at 20,000, seeing new record highs, but we're also seeing a broadening in the market. Those Mag 7 stocks outside of, Tesla and Amazon have kind of taken a back seat. Alphabet was down for quite some time. We've seen it kind of rally a bit there overall, but in the past few weeks here, they've taken a bit of a breather. Microsoft's been rummaging through the mud a bit there. So, even if we look at something like, let me go to NVIDIA here on the charts, and we'll take a look at that one really quick. So let me scroll up here again using our trading view. So there's Broadcom. We're going to be reporting there tomorrow. And if you see here on your screen, here's a look at NVIDIA. And where has NVIDIA been going for the past few weeks here? You can see that, well, they got up here to 150 at the top, and they've been just bouncing off the 140, 138 support line right there, just going back and forth. And this started back at this point right here. That was October. So since the start of October, you're looking at a stock that's really gone nowhere. However, the S&P 500 keeps climbing. Why? Because we're seeing a broadening out, which is a very positive sign. People start saying, okay, are we getting is it starting to look frothy at the top? Is this just people say, oh, the animal spirits and stuff? No, it's starting to broadening out. Now, if we can get those leadership areas to start rolling again, semiconductors getting going again, it's going to be a big sign tomorrow which way we're going to be headed based on what Broadcom's going to report for us. But we could see this market, there is room, there is a catalyst for the stock market to keep climbing higher if we see the likes of NVIDIA and Microsoft jump back into the fray here and carry those markets higher from that perspective. So although valuations are definitely stretched when you look at them right here, it is a healthy standpoint that we could see higher earnings growth than potential, which makes things seem a little bit better, not as stretched, but they definitely are stretched. There's no, qualms about that. But, there's different varying factors that you want to look at. There's not just one specific valuation metric that you should always look at. And that's why I do my one-on-one coaching to kind of show people what is my checklist of things that I look at before buying into a particular stock, or for that matter, selling a particular stock. You never want to focus on one metric. And we go through a slew of 10 plus different metrics, looking at the health of the business, looking at valuation, what type of stock is it? We got to look at these. There's not a one size fit all checklist for all different types of stocks. So we need to alter that as it pertains to the company that we are looking at overall. So definitely, there is room higher if we can get the likes of NVIDIA moving again, and Microsoft. They've had fantastic years. No one's going to complain about 100% gain with NVIDIA there, but just looking at it, valuation isn't all that out of craziness. Let's go over and look at valuation real quick, just to look at from a forward PE multiple. Let me show you what the likes of NVIDIA is looking like right now. So if we go to NVIDIA here, share my screen with you guys again. We go over to the earnings estimates. We could see that for next year, analysts are expecting $4.43 on an EPS basis. So on a forward-looking basis right now, with shares trading at, we'll call it 140. We'll just round up for quickness here. And 443, we're talking about a 31.6 times multiple. That's a stock that over the next 2 years is growing at a 35% clip on average. If you take the 50% and the 25%, you're looking at a PEG ratio that's below 1. So the growth that this company is expected to generate moving forward, just looking at the next few years here, compared to the multiple that you're paying, you're getting some good value here as it pertains to NVIDIA. So another, again, if we get some further weakness in the stock, another one that we're going to be looking to do some option plays on overall, generate some income, and at the same time, generating an opportunity to potentially buy a stock that we want to buy at a price that we want to buy it. That is the unique thing about options. That's why I have the options workshop. That's why we have the Options Edge Plus. And again, if you are just joining us, we have our Options Edge Plus product where you get weekly reports in terms of different plays, walking you through the education, the technical analysis, the valuation behind one specific play each and every week. But on top of that, within our Discord community for Options Edge subscribers, you get access to the different trades that we are making. We're not doing a full write-up report for each and every trade because we do a handful of trades on a daily basis, or every few days for that matter. So definitely, if it's something that you're looking to get into, whether you're brand new to investing in options or whether you've been doing it for a little while there, definitely, check out our Options Edge Plus. And Melly, thank you for that. A new member to the YouTube channel there. Great to have you. And again, anytime you guys are members, make sure that you post a question there. That will pop right to the top of my screen so I can make sure that is one that we get to there overall. So Christina, thanks for tuning in from Texas. We got, John Bircher. He's got some Tulsa friends here tuning in. And ANET is something that is on Christopher Duke's watch list right there. So that's pretty much the show I got for you. That is the Stock Market Hours. Make sure you stay attuned to the Broadcom earnings that are coming up, our PCE report. So we have some economic news, some earnings report, and we share all of that stuff and break it down for you within our Discord community. So you could even join the free side of things if you want to. There's a link down in the description below. We just like to have a community of people that have one goal in common, and that is to build generational wealth. That is what we are focused on from that standpoint there. So it's a great place to conversate as it pertains to the stock market, get rid of all of the other fluff that goes on in the world, and just focus on making true money the right way there. So thank you guys for tuning in tonight. It's been a joy to be back with you. And with that being said, I want to make one quick announcement here. Is we won't be having the Stock Market After Hours next week, but I want you guys to be paying attention because I will be on TV. I will be at the closing bell at the NASDAQ, not the New York Stock Exchange, right around the corner there, but at the NASDAQ. So for any of you guys that are out there in New York City, I will be out there next week on Wednesday ringing the closing bell. So definitely stay attuned to CNBC and check me out in the back. I'll be the tall guy clapping and waving. So hopefully you guys will, I'll be able to see you guys there as well. So Mike's got a question. Mike, options for beginners, which one? So yeah, definitely. Whether you are a beginner or you are attuned and been investing in options for quite some time, that report is going to be super helpful to you. You can check it out, our Options Edge for more, Options Edge Plus for more information there. But the report's going to kind of break it down. Why am I entering into this trade? Showing you exactly how to enter it on your own brokerage, and what are the downsides and the upsides, income play, what are the downside risks, so on and so forth. And we're going to work you and help you take step by step through it on what we're doing it. How are we managing the overall trade, whether it's in the green or whether it's in the red, and we have to do some risk management from that perspective. So it's a great tool, a great product that we're excited about. We already have over 100 members in that particular program alone, let alone that is separate from our Edge Plus. So a lot of people like options, and it's something that I do on a regular basis and have a pleasure doing it for. So Alejandra, congrats, Mark. Thank you. Make sure you guys say hi, and make sure you guys tell me if you saw me at all. So thank you and congrats. And hopefully one of you guys will record it and send it to me so that I can see it there as well. Hopefully, my wife doesn't miss it, but just in case, if you guys want to hit record and send it to me, that would be awesome there as well. So great to be with you guys. Hope you guys are all doing well, and hope you guys have a fantastic back half of the week, and we will see you next time. Take care.